Welcome back. Let's take a look at the second exercise we need to work on our homework assignment in Connect. We are looking at exercise 1-7. In this one, we've been asked to prepare a statement of stockholders' equity at the end of the year. That's on December 31st. At the beginning of the year, on Jan 1st, Buffalo Drilling has $11,000 in common stock and $8,200 in retained earnings. During the year, Buffalo reports net income of $8,500. They pay out dividends of $3,200 to their stockholders. They also issued additional common shares of $8,000. So this is a fairly simple exercise, and I'll start out by preparing my statement of stockholders' equity. I'll fill out some of the basic information over here. I have the name of the company in the first line. Second line, I have name of the statement, which is statement of stockholders' equity. And third line, I'm identifying that it is for the year ended December 31st. And since they've not given me the year, I'm just putting XX. Now we know in the stockholders' equity section, there are only two accounts. The two accounts are common stock and retained earnings. And the third column is just for the totals. So I'm only concerned with two accounts, common stock and retained earnings. Now we will always start out with the beginning balance. If it's a brand new company, these beginning balances will be zero. But we don't have a brand new company because they've given us beginning balances. They've told us common stock is 11 and retained earnings is 8,200. So let's go ahead and just plug those numbers in immediately. No calculation needed. We have that number. 11,000 plus 8,200 is 19,000 is what I started the year with in my statement of stockholders' equity. Now, stockholders' equity, the common stock account, there is only one type of transaction you're going to see in this introductory accounting class. The company may issue more common stock. At least at this stage, that's all you're going to see. You will issue more common stock. Retained earnings, there are two items that go in over here. When at the end of the year, when the company reports their net income, it gets added to retained earnings or subtracted depending on whether it's a net profit or a net loss. And dividends are always paid out of retained earnings. Dividends is payment to stockholders that comes out of retained earnings, so it's a subtraction. So let's take the information over here, this next two sentences over here. During the year, the company reports net income of $8,500 and pays dividends of $32, and they issued new common stock, additional common stock of 8,000. So we will start with the additional stock issue, new stock issues, and that's 8,000. It's put in this column for common stock. It doesn't affect retained earnings. Nothing for retained earnings. You can either put zero or just leave it. I think in Connect, you just leave that. You don't do anything over there. The total is 8,000. New stock issues for the year is 8,000. It affected common stock, not retained earnings. We report net income. So let's write that down. Net income. Net income does not affect common stock. It affects retained earnings. You add 8,500. And then finally, we have dividends. Dividends, again, do not affect common stock, but they do affect our retained earnings. Dividends are paid out of retained earnings. So I subtract minus 3,200. When you add across, it's minus 3,200. This now gives us the ending balance. So the ending balance of common stock, I started with 11. I issued 8, so I have 19,000 over here. Retained earnings, I started with 8,200. I earned a net income or net profit in the year 8,500, but I paid out 3,200 in dividends. So what I'm left with is 13,500. Now, whether I add the numbers across horizontally or vertically, I should come up with the exact same answer. 19,000 plus 13,500. I get 32,500, and it should be the same if I go down vertically and add these numbers. So once again, to recap, statement of stockholders' equity has only two accounts, common stock and retained earnings. In your 201 class, all the way until you get to the very last chapter, the only thing you're going to see with common stock is a company may issue more common stock. You're not going to see anything else happen over here. Additional common stock is issued. Retained earnings, you're always going to have two items that may affect it. As long as a company is in business, they will have a net income. It's going to be a net profit or a net loss. Net profits are added, net losses are subtracted. Dividends are always, if they're paid out by the announced and paid out by the company, it's going to be a subtraction. So that's all there is for the statement of stockholders' equity.